Welcome back to the next episode of the eCom Growth Show. I'm your host, Danan Coleman. With me, I've got a longtime friend, Chelsea Cohen. She is the founder, co-creator, SoStocked. Need I say more? But basically, Chelsea's the brains behind it. So, Chelsea, would you please introduce yourself? Let's go before SoStocked.
Okay. Yep. Yeah. I started out selling in 2014 on Amazon. And so I've been in the industry about 11 years, have done a lot of different, I guess not a lot of different work, but in 2017, I was speaking a lot on copywriting. And so had small copywriting agency. My first love has always been writing, but then ended up pivoting to inventory.
Boom.
Yeah.
I got this book from Chelsea like 2 years ago.
Yeah, that's right.
Yeah.
So started out with writing and ended up pivoting when I started having problems with inventory in my own business. Drastic impact on revenue and profitability. So also cash flow, and looked for a solution. Wasn't anything there that actually was serving the community. Started talking around. Most people were saying, nothing really works. We're using spreadsheets. And that is how I ended up in software, was recognizing a pain of my own, was a pain of other people's, and then meeting my business partner, which is what made it all work, because I have never coded in my life and I have never even dreamed of a software company until that point.
Yeah. And so I know you since well before SoStocked, and I remember you talking about these issues and the problems that have arisen because of it. So I want to tailor this towards inventory, even though you guys have been in existence for 5 years now, longer, 6.
6, yeah. We did our beta launch in mid 2019. By the end of the year, we had ripped out our forecasting algorithm, built it back from scratch.
Yeah, that's right.
Beginning of 2020, right before the pandemic, is when things started to catch fire. $1 million sellers kind of started taking hold of it, tighten network. And so we started taking off. And then 2020, supply chain went crazy, restock limits, 3PLs came into being a major factor. So things really took off at that point for us.
Got it. Okay. All right, cool. Well, let me start off with some questions regarding all of that. So what are the most common inventory mistakes?
Yeah, that's a good question. There are a few. There's a couple that have been very prominent and were some of the largest factors for stocking out. One of them is marketing inside of a vacuum, right? Not having that connection between marketing and inventory. So the marketing team goes and does what they do, but doesn't keep the logistics and the inventory side of things informed enough to know that something's going to happen. So that has been a big problem, is running out of stock because you don't have the operations side clued in with the marketing side. So that's one common mistake.
Okay. What about, well, maybe I should save this for a different question, but forecasting, right? You mentioned earlier that you built a forecasting tool and then scratched it and restarted from the ground up.
Mm-hmm.
What does it take? Like, for me, it's easy. My inventory, when we're running low, we just send more in, right? But our manufacturer's in California, and the majority of our sales are California and Texas, right? Mm-hmm. And so the majority of our inventory goes to a California warehouse.
Yeah.
So I don't have the issues that most people do in private label, because I can just say, hey, here's a shipping label, shipping 500 units or whatever it is, right?
Yeah.
So how do you handle forecasting? Because you got to think about, some people do lightning deals, some people don't. Some people do Black Friday deals or Cyber Monday deals or Prime Week or whatever it's called these days, whatever the cool kids call it. How are you handling that?
Yeah. So the foundation of forecasting is always the data from Amazon. But using Amazon data alone without adding on top of it and also without processing it is one of the reasons people run out of stock, especially if they have a long lead time. When you have a long lead time, you have to be planning months into the future.
Yes.
So generally what needs to happen first is you take Amazon data and then it needs to be adjusted for outliers, lightning deals or Prime Day that's not going to repeat over the next, 3-4 months of whatever period you're forecasting. And then any stock outs, Amazon doesn't give you stock out data. So that needs to be filtered out to get a good average, or if you're using seasonality to adjust for those different things as the foundation. And then you have to layer on top of that the lightning deals, the Prime Day, whatever, the email campaigns, any marketing that you're planning on doing. Amazon doesn't have that insight either. So whatever Amazon's recommending doesn't have those factors.
Okay, so you're saying you start with a baseline of this is my average inventory out. Then you layer on top of that anything that could be happening that would be extra sales.
Yeah.
So, okay, well, that makes sense because now that I think about it, I'm actually glad I asked that question because I don't do any deals at all.
Mm-hmm.
I don't do discounts. I don't do subscribe and save.
Yeah.
I don't do Prime, nothing. Like my price stays the same all throughout the year. And so even then I do see these peaks when people are in a buying mood. I think they just buy because they decide they've got money to spend, So,
yeah.
All right, cool. So with that in mind, we've got a couple of the mistakes. Can you give me some of what are the best practices? What should sellers be doing to not just prepare for this, but be prepared? And then what do they do? What should they be doing during the times that they think they're prepared? What are those best practices?
Yeah. So first and foremost, a lot of people know having a buffer stock. People call it a safety stock. That's just the bare minimum how many days of stock you have, right? You don't want to run to zero because Amazon, in a couple of different ways, will penalize you for not having enough inventory spread across the country. One of those famously is the low inventory level fee, which is a fulfillment fee. What Amazon's doing is, in order to fulfill inventory from a distant location, they have to express ship it to get it there in the 2 days. And so they're charging you a fulfillment fee because you don't have that spread. So there's the low inventory fees. And then they also penalize your ranking in those different areas to try to discourage people from purchasing in those areas so that they don't have to do the express shipping.
Yep.
So that's one of those things is if you have a buffer stock, we usually say, we used to say 30 days. Now we say 35 days because Amazon, they penalize at 28 days. So we say 35 days of buffer stock. And then the other factor, we call it min-max restocking, which is you have that buffer stock, but you also set a maximum and you say, I want to stay within this range. Say 30 days and 90 days, for example. If you have a shorter lead time, like you do domestic, you can go to, 60 days, 75 days. If you have a longer lead time, there's more variables, more things that can go wrong. So then we say 90 days is a good rule of thumb between 35 and 90, but not much more than that because then you get into the aged inventory fees and the term storage fees.
Yeah, there's an exact science to this now. Back when you and I started, just send in inventory and it sold. But now this is like Goldilocks. Not too much, not too little. It's got to be just right.
Yeah, you got to thread that needle. And it's interesting because back when we started selling, it was a lot cheaper to send in inventory. The fees were not nearly what they are. Removals used to be 20 cents per unit. Now they're done on dimensional weight where you could have a pillow and it costs you, $9 to remove 1 unit of a pillow.
Yeah.
Amazon
more than it costs you to manufacture it, ship it here from China, and ship it into Amazon.
Exactly. So you're either getting bit by the removal fees, which are usually more expensive than the storage and aged inventory fees. So it really puts you in a bind. Whereas Amazon used to, third quarter, if you had too much inventory, they would say, hey, you can remove your inventory for free, but you can't send it in for the next 3 months. So that was something where, you could just remove something. They would send it to you for free because they wanted the space available. So it's changed a lot. And in 2020, there was no one who was talking about inventory.
Yep.
So it created
Yeah,
this.
you were literally the only one.
Yeah. Yeah. And so it created this opportunity to educate a lot of people about that, because it was something that sellers weren't used to. They could just direct ship to FBA. They could do it. It's called just-in-time inventory, where it's just getting it in, before you run out. A lot of the algorithms weren't as strongly against re-ranking after stockouts as well.
I was going to say they weren't as strongly against sellers.
Right. Yeah. Yeah.
All right. Well, cool. That was very valuable data. Thank you very much. Let's move on to the next question, which is, what is inventory-minded marketing? Now, I have some ideas on what this would be, and I would say you are scaling your marketing to what you know is available based on prior statistics on what is sold. But give me the good answer.
Yeah. It's a term that I created. A lot of conversation has always been about marketing. So, I wanted people to be aware of the connection between inventory and marketing. And, in all honesty, people would pay more attention to, the marketing side. So I wanted to speak to the marketers about what a good system is, right? We talk about marketing in a vacuum. And so this is the opposite of that. It's basically marketing is going to give their marketing plans to inventory, so that inventory can make informed forecasting decisions and calculate things based on the marketing. But then it's also telling inventory to be active, not to passively wait for, see a change, but to give data to marketing. So weekly basis, monthly basis, however fast, whatever your velocity and volatility is, sending reports to say, hey, these products are at risk of stocking out, or there's low stock. If you keep at this pace, you're doing really well with this new campaign that you launched, and maybe you're doing better than what was expected. So it's giving them those risk reports, those stock out risk reports, and then also giving them those reports on aging inventory, slow sellers, things that they're forecasting to have a lot of excess stock, so that
need to be pushed.
Yes, exactly. So marketing can be not just revenue focused, but profit focused, so that because they are the driver. Inventory is the fuel, but marketing is the driver. And so if marketing doesn't know that they're sitting on, $10,000 a month in aged inventory fees, all of the revenue that they're bringing in the door is getting hit with all of those fees. And the top line looks very different than the bottom line.
Yeah, for sure. Yeah, I've got a buddy that he used to have around $2.5 million a year. Now, this is in his own warehouse. This is not in FBA warehouses, but about $2.5 million a year of just like super slow moving inventory.
Yeah.
That just took up shelf space.
Yeah.
And so what's interesting about that, though, and this is a little side thing, is that he used that to leverage cash flow from his bank.
Okay.
Because he can, which was a tactic that I'd never considered, and nor would I, because I don't have a warehouse. I never even see my inventory. But
right.
Yeah. Okay. Cool. Well, that makes a lot of sense. Now, if you're just an individual, though, this is not as critical. But, well, I shouldn't say that there shouldn't be as much of a disconnect in communication between me, myself, and I, right? But I still should be mindful of that. So does SoStock keep track of that stuff and give you alerts?
Yeah. So first, to address that shouldn't be that big a problem if it's just you on your own. One of the things I think of is if you're not keeping track of that stuff, it can become a problem. We had...
That would be me.
Yeah. Yeah. So, husband and wife teams I've talked to, they, one runs one side, the other runs the other, sleeping in the same bed, and yet they don't have those conversations. I also think about aggregators. Brand managers would have to manage both sides. And, that didn't necessarily work that well, because they may be really good at marketing, but on the inventory side, That's always the thing that people procrastinate on, because it is a pain. It's, it's not a lot of math. It's not, the fun, sexy part. So yeah, so SoStock does help with that. We have stock out, or reorder alerts. So if you need to reorder, if you need to transfer, it's all based on the settings. So the data pulls in, you have certain settings within SoStocked. You can set the min-max restocking. So I want 35 days and not, at a max of 90. You have your lead time, you have your transfer time. All of those moving pieces will calculate the different forecasts. We call it simultaneous forecasting, which is order forecasting, transfer forecasting, and then other marketplaces. So it can get complex, but once you do those settings and then you're diligent about including your marketing plans in those calculations, just plugging in, your lightning deals, what you expect to move at that time, then you'll get those email alerts, have a dashboard, a command center that will say, hey, you need to reorder X number of units.
Awesome. Okay, cool. And then I think my last question, let's see, how does inventory management tie into profit? I like this one a lot because so few people think about this.
Yeah. It's my favorite topic, profit and cash flow and how inventory really drives all of that. The inventory side of things, first and foremost, supply chain is everything. Afolabi, who I'm sure you know from Haunting Worldwide, he likes to say, essentially that you make or lose money before your inventory even arrives.
Yes, that's right.
So looking at resizing your products is a huge opportunity. I was looking at a couple of different products that we're kind of auditing, and it's the difference. There's a 40-cent difference between one product and its competitor simply because of the size and how they package it. So that's the first step, is the size of your inventory dictates the profitability of your product. And then if you are, obviously we think about stockouts, but if you have too much inventory sitting at Amazon, you've got the aged inventory, you've got the extra storage fees, those are all factors that can make a product that was profitable no longer profitable. And it's not very transparent. So we have, one of the things we have is an aged inventory calculation where we can forecast for aged inventory. And you can see there's a huge spike, 4 months from now. You need to know that 4 months from now. You don't need to know that a month before or when it's hitting, your Amazon account in terms of fees. So those are things I think that get overlooked as drivers of profit or lack of.
Yeah. Because that could be your profit. It has been in my case before with a totally different product, where I looked and we have all these fees and we're not going to make money on this product. So we have to decide, do we drop the price and just blast through the inventory, or do we recall it, or do we have them destroy it?
Yeah. Yeah. And destroying and removing are the same cost. There's also liquidation. People don't know Amazon has a liquidation program. There are some reasons not to do that if you don't want your brand, products out there.
Sullied.
Yeah, exactly. So there's reasons not to, but the best thing is to try to just flash sale and just kind of, or a fire sale and get rid of it. The other factor in that is cash flow. It'll free up cash flow. If you're looking at borrowing money from a lender, you should start first looking at your slow sellers, your aged inventory, avoid some of those fees and get back that cash to reinvest, because you've got opportunity costs, wasting away in the capital just sitting in your business.
Yeah. All right. And what are some of the biggest levers to pull to increase scalability?
Mm-hmm. Yeah.
This is an interesting one for me because I've never truly scaled.
And that's the buzzword that's been around for years, but people don't break it down into what are the action steps besides launch more products, market better. The marketing side of scalability is definitely the focus, but you can't get there without the elements of scale, which are profit and cash flow. And so those two things need to be addressed. We're actually putting out a white paper. We do every year a fees white paper, and with Carbon 6. SoStocked was acquired by Carbon 6. And so within that, this year, since the fees didn't really change, put together, how to scale with profit and cash flow and capital utilization. And so with profit, like we talk about resizing a product. The other lever to pull would be to look at your tariffs. There are people who can audit your tariffs and to legally make sure that it's kind of like the tax code where you can classify an expense as one thing or another and the implications couldn't be better.
One way or another. Yeah.
Exactly. So, and it's all legal. It's just a matter of, codifying. So those are some of the ways. And then, of course, keeping good stock levels from the profit side of things. The cash flow side of things is another piece, moving that inventory, right? Recovering that cash from that stale inventory sitting there is one way. But another way that is not utilized as much as it should be is to change your payment terms. That's huge.
Yes, I'm glad you brought that up. And let's talk about that a little bit because I think too few people actually implement that.
Mm-hmm. Yeah. Yeah. It's there's something called the cash conversion cycle. And so that looks at how much inventory you're holding, how quickly do you get paid, and how quickly do you have to pay people for, the things to run your business. Controlling, how quickly your inventory turns over, right? Not holding 180 days of inventory, holding 90 days. That's one lever. The how quickly do you get paid? We don't really have a lot of influence over that because that's Amazon, right? They pay us when they pay us. They hold back a percent.
I mean, new accounts these days, Amazon holds a percentage of that money. I don't know if it's indefinite, but sure seems like it. Those of us with aged accounts, we get paid out every 2 weeks unless we elect to be paid out daily, which is an option.
Yeah.
But yeah, it's definitely that makes a lot of sense. And so did you have more that you wanted to go into on that? Because I feel like there's more.
Yeah, just payment terms. I think that's the one that's generally overlooked. And sometimes it can be more impactful if you have cash flow constraints. It can be more impactful to negotiate payment terms even before negotiating, cost discounts from your supplier. Mm-hmm. So I think that's huge. Going from a 60-day term to a 90-day term, for example. I like one of the things that sellers sometimes do a good way of structuring is to pay 30% upfront, and then let's say 70%, is on the back end, ordering, let's say 3 months worth of inventory and then shipping out on a monthly basis. So 30% down, 70% when it ships. And if you're shipping it every month, you're only paying 70% on that first month. And they'll generally store the rest, the other 2 months, for free. And so that your cash flow is a lot more fluid because your cash is flowing. You're not paying everything. You want to get it as close as possible to once the inventory arrives, it's, you're then getting paid. You're not paying for the inventory up front and then waiting 2 months for it to sell through before you put the money back in your pocket.
Yeah. And just to expand upon that a little bit, there's a lot that you can do with your manufacturers. Chelsea is suggesting that before you even get the pricing of your inventory, you talk payment terms with them, which is an excellent idea. Most of them will tell you, 50 down, 50 when it ships. Mm-hmm. A lot of them, if you've positioned yourself well, they'll say 30% down, 70 when it ships. But you can also do 30 down, 70% when the first shipment ships, and then they keep the rest. Or maybe you do a 35, where am I? 30, right? And you just pay them, 35% to make it, 35% when your first shipment goes out, mm-hmm. and then the other 30% whenever. And then even beyond that, there's companies like SKU Drop, where you don't even have to have, some manufacturers, they'll say, no, we can't hold that inventory. We don't have the space. Cool, SKU Drop. Put that inventory. They've got warehouses in China. They'll handle all your logistics for you too.
Mm-hmm. Yeah.
So yeah, I was actually on a live stream with both Afalabi and Mark from SellerView. Uh-huh. And we were talking about tariffs. We did a live stream just on tariffs and tariff codes and tariff engineering and all that stuff. And, it's so true what you said at the very beginning. that your profit is made or won at the beginning, and then by the time it gets to you, you're just there, like SoStocked is there to make sure that the profit continues to flow.
Yeah.
Right.
Yep.
So yeah.
Soon enough. Yeah. We're moving into profit now. So
that's right. Tell me a little bit about that, because you've just been hinting to me and I don't even know the scope of it. So tell me, please.
Yeah. So you've got a lot of products that show you today's profit, yesterday's profit, last month's profit. But in order to plan, you need to know what's happening tomorrow. And so that's been a big gap in the seller community, and really kind of a failing of the SaaS e-commerce community to solve that problem. It's one of the quotes that I like is by Peter Drucker, who's the father of modern management. He says something about how strategic planning doesn't deal in future decisions. It deals in the future of present decisions. And so not having the data on what the future looks like and how today's decisions, if I know, for example, every November, without fail, someone posts about how Amazon just took $20,000 from their account. I've had 8-figure sellers ask me, new to Amazon, large sellers, how do I get that money back? You don't. They think it's a mistake. It's got to be a mistake. But you've got to, if you don't know that's coming, and some of it in fourth quarter is unavoidable. But if you have inventory that's not going to sell in fourth quarter, and you had 6 months to move that inventory, you're paying on inventory, 3-4 times. I think it's 4 times what you would be paying in the previous quarters. You're paying for that stock to sit there at FBA at these high rates, aged inventory. So having that foresight of what is my profit going to be tomorrow and 6 months from now on these products, and then on a catalog level, how do these particular products, there are products that can drag your margins down. There are businesses who are doing really well, but they have products that are dragging their margins down to the point where they might not even be able to sell their business upon wanting to exit. So that's a huge problem. And so we've got the foundation built for being able to see what is your profit today based on the accumulated storage fees and accumulated aged inventory fees. What is the average of what that cost you? So that today, what your profit is based on how long the inventory has been sitting there. And then next month and the month after that for up to a year in advance. And then being able to identify and filter products that, let's say, you don't want any products below 10% profit margin. Well, we can filter those out, and we can also see how does that impact your overall profitability across your catalog if you were to stop selling those products. And that could be the difference between structuring an exit or not. If you need to hit 20% or greater in profit margin, and you can see that losing, these 3 sellers or refining and improving the profit is going to get you there, you can make those plans before you go to your broker and try to sell a business that's not sellable.
Nice. Awesome. That was really insightful. Thank you very much. I never considered that. Why I love doing these podcasts is because you and I have known each other for 7 years, 8 years, something like that. And I've heard you speak so many times, but I always learn something new on these things. It's like, this is not for the people that listen. Hi, Mom. Sorry, it's not for you. This is for me, and then for you, because then you get the exposure. But awesome. One last question, and then we're gonna wrap it up, Chelsea, because I told you we're trying to keep these closer to half an hour rather than 60 minutes because nobody wants to hear me talk that long. Can you please give me some recommended actionable strategies and or tools? Because I know that you have a couple of links that you can give out to people that are just like ultra valuable. And this is from years ago that I remember this, but what are some strategies and tools that you can give us?
Yeah. So looking at first resizing your product, that's kind of a long-term thing because you have to, resize it and sell through and all of that. Resizing your products is a huge opportunity for some people. If you don't know how to do that and you see that you've got competitors that are selling for less than you are, buy those products and see how are they packaging this. That could be very insightful. And then running the numbers on that and saying, don't forget dimensional weight. That's an important one.
Can you explain dimensional weight for any of those that don't actually understand what that means?
Yep. So Amazon, they have a formula. It's length times width times height divided by 139, which is just, they call it a dimensional divisor. No real significance to that. But what it does is if you've got a product and you want to put it on a truck to ship, that truck has weight restrictions and space restrictions. So if I have gold bricks, it's going to cost me so many dollars because of how heavy they are. But if I have a pillow, if I'm doing weight only, it's going to be a lot cheaper, but I'm going to get less pillows in there because of the size. So the calculation looks at it looks at the dimensions and it converts it into a weight so that you have actual weight and dimensional weight, and whichever is greater is going to be the one that they bill you on.
Yeah. Cool. Thank you. I'd rather be shipping gold bars if I'm being honest.
Yes. Yep.
All right, cool. And then please continue on your recommended strategies and tools.
Yeah. So resizer, and we have some tools for resizing and also resizing your cartons, optimizing your cartons.
Oh, that's what it was. Yes.
Carton optimizations, especially with Amazon warehousing and distribution, they charge a box processing fee. So it's a very different thing to have 10 units in a box versus 30 units in a box. So being able to get more units in a box means less Amazon warehousing and distribution fees per unit. So those are two free tools that we have. You can find tools and SoStocked demo and a link to my socials and things like that on SoStocked.com/connect.
Okay.
So that's where all those free tools are. So I would say that's a good way to go about it. And then for aged inventory, we have SoStocked we do aged inventory projections. And so all of that pulls in from the API. If you aren't a SoStocked user or, have your own system, one of the things that you can do is in Seller Central, go to the reports, the fulfillment reports, and the FBA inventory reports called FBA inventory. Download that. It has a ton of data, and it includes aged inventory. So you can filter for which products are, 300 days old, which products are 240 days old. And at 270 days is when it jumps to charging you $5.45 per cubic foot. So that's a huge clip to jump off of. And being able to assess that, run that report, let's say on a monthly basis, and send that to your marketing team and say, hey, this is going to be costing us a lot of money. Put together a campaign and sell through it.
Yeah, nice. That's one that could make sense to lose money on even, because it'll cost you less to lose money on sales than it would on fees.
Yeah.
Awesome. Chelsea, it's always a pleasure to talk to you. I'm so happy that I got to have you on my podcast because I think I had you on the Manage My Stats podcast.
Yeah.
Or
I think.
Or a live stream or something like that. Yeah. So now you're on mine, which is awesome. So thank you for being here. And is there anything else you'd like to say before we let everybody go?
Oh, yeah. So we have a free profit audit that we do. So if you're interested in finding out what your stock outs, your overstock liabilities are or have been, and you're interested in resizing, right? The resizing tool that we have on the link that I just shared, we'll do it on a one-off basis, but we'll run your entire catalog. And so that is a free audit that we run, and that's at carbon6.io.
Cool. Thanks, Chelsea. Always a pleasure to talk with you, and I'll see you in the very near future.
Yes. See you soon. Thank you.
All right. See ya.